Good day everyone and welcome back to the InvestCom YouTube channel. Today, I want to talk about super important things everyone in the stock market should know. No matter if you are a beginner in the stock market or if you were investing in the stock market for a long period of time. So, today I want to talk about stock market valuation. I'm going to talk about why it is so important to always know where is the stock market valuation. I will teach you how to value the stock market, and I will show you where it is better to invest your money now based on current stock market valuation. And last but not least, probably the most important thing I'm going to tell you today is, should you stop investing your money for now, or should you continue investing into the stock market? By the way guys, if you don't mind, please click the like button and hit the subscribe. I really need your help for the YouTube algorithm. I will appreciate that a lot if you will like this video right now. Okay, so let's get started. First thing I want to talk about today is why it is so important to always know current stock market valuation. Now, there is a ton of reasons why it is better to know current stock market valuation. But in my opinion, the most important thing why you should know current stock market valuation, because it can save you a lot of money. When you see that the stock market is overvalued, that is a clear signal for you that from now you should start to invest more carefully. You should put less money into the stock market, you should buy stocks with better balance sheet, you should buy stocks with less risk, and you should focus on value stocks. Because if you see that the stock market is overvalued, this is a signal for you that there is a potential crash incoming. So, you should choose safer stocks to invest. You should invest into stocks that has less debt and more cash on their balance sheet, which will help them massively if the stock crash occurs. Now, if you find out that the stock market is undervalued, this is a clear signal for you that it is safer to invest right now, that you can choose riskier stocks, and you can put more money into the stock market. So, knowing current position of the stock market is always beneficial for you. It will show you the risks, you will know what portion of your money should be in the stock market right now, and what you should expect from the stock market. Okay, let's move on guys. Now, the next thing I want to talk about is how can you determine where is the current stock market valuation. And perhaps the main option is looking at the stock market indexes. But only looking at the index price will tell you nothing. Over time, it just has the uptrend, and most of the time, when there is no crashes, it goes up. Because the earnings of companies are always growing, so the prices of companies also goes up. So now, how can you determine current stock market valuation based on the index? Well, you need to divide the price from earnings of companies that are included in that index. If you are a beginner, probably most of you guys invest into the US stock market. In my opinion, the most popular indexes that people use to value the US stock market are Dow Jones Industrial Average, the S&P 500, and the Nasdaq. Now, if you are investing elsewhere, not only into the US stock market, you should take a look at other indexes as well. Now, personally, I am investing into the China stock market as well. I have about 25% of my investments in the China stock market. So this is quite a big portion of my money invested into the stock market in China. That's why I am not only looking at the US stock market indexes, but I also take a look at China stock market indexes. You can see those indexes on your screen. Sorry, I can't pronounce them, this is too hard, but most of the time I am using the first one, because it represents the largest companies in Hong Kong. So, if you are not only investing into the US stock market, you need to look at the indexes of the market that you are investing in. But for today's video, I'm gonna stick with the US stock market, and I'm going to show you an example with the S&P 500 and one more index I will show you later. So, the S&P 500. This index includes 500 largest companies of the US, and that's why it is one of the best metrics to value overall market. I choose the S&P 500 because Nasdaq is highly affected by the largest companies like Tesla, Google, Facebook, Apple, Microsoft, and Amazon. If those companies are doing good, when most of the time they are doing good, and if smaller companies' performance is not so good, those large companies can carry the Nasdaq index and the results of the Nasdaq will be good while most of the companies are doing not so good. So this is a kind of tricky situation with Nasdaq. Now, the Dow Jones Industrial Average includes only 30 large cap companies. So in my opinion, this not represents the overall market. That's why, in my opinion, it is better to use the S&P 500 to value the overall market. Now, let's have a look at the current S&P 500 PE ratio. You can see that it is almost 40 points. Now, this is extremely high. The average PE of the S&P 500 throughout the history was about 16. Now, don't get scared so much. The average PE for the last 20 years is about 25. Now for me, if the PE ratio gets lower than 18, then I am putting a lot of money into the stock market. I am putting about 60 to 70% of my money into the stock market. Now, when the PE gets around 23, I am starting to go more into cash and I am not buying stocks as crazy. I am trying to build my cash position and to have about 50% in cash and 50% in stocks. Now, if the PE ratio goes higher than 26, I will put even more money to my cash pile and I will start investing very carefully and look for safer companies. So currently, the PE ratio of S&P 500 is absolutely in the moon. You can see that in the history of the S&P 500, the PE ratio is only higher in the dot-com bubble and in the stock market crash that happened in 2008. So right now, the PE ratio is absolutely super high. But is the market really so much overvaluated? Now, here you can see S&P 500 earnings. And well, probably each and every one of you knows what is happening in the world for the last year. All the things in the world that are happening right now are affecting the S&P 500 earnings a lot. Now, the prices of the companies keep going up. And the economic situation we have right now won't stay forever. Eventually, things will get better and businesses that were closed right now will reopen. Of course, if they did not went bankruptcy. So, because of the stimulus packages and because people think that everything will end soon and we will get back to normal lives and the businesses will heal up, people are investing into the stock market and the prices go up. But the current earnings of those companies are low. That's why we get such a high PE ratio. Now, as you can see, the earnings are growing throughout the time. Over time, companies are making more and more money. And you can see that the companies are making way more than they were making 50 years ago. The highest EPS ever recorded is 141 points. So, if we take our current S&P 500 market price and divide it by the highest ever recorded EPS, we will still get a PE ratio higher than 27. And the big question is, when will the businesses will be able to get back not to the normal earnings, but to the record high earnings? And they even need to get bigger earnings than the record earnings. So the PE ratio could get smaller to the normal rates. And let's say, in the best case scenario, if we will be able to get back to normal lives in 5 months, how long it will take businesses to start growing their EPS again. In my opinion, this will not happen by the year 2022. And even if the S&P 500 index will reach 140 points, it will still be overvalued. You can see the forward PE ratio of the S&P 500. As you can see, the last time the forward PE ratio was so high, it was the dot-com bubble. Now, don't get so scared. You are pretty much always should be able to find undervalued stocks that you are able to invest in. The next index I want to take a look at is Russell 2000. Now, this index consists of 2000 small cap stocks. As you can see here, the Russell 2000 PE ratio is also very high right now. If you take a look at the Russell 2000 Growth Index, you can see that the growth stocks right now are insanely overvalued right now. But the good thing though is that if you look at the value stocks, you can see that the PE ratio is only about 20. So, should you try to time the market and stop investing for now? Should you try to wait and to time the stock market crash? And my answer is absolutely no. First of all, it is very hard to time the stock market crash. You might be waiting for so long and miss massive gains while you are waiting and doing nothing. Warren Buffett, the greatest investor of all time, started to invest in 1942. He's been investing throughout his life, and there was no single year when Warren Buffett did not buy single stock. Just imagine how many crazy things happened over that period of time. Wars, stock market crashes, and everything else. But Warren Buffett was always investing. And well, he's now one of the richest person in the world. Now, the stock market crash that you're waiting for might never come. The things just can get normal, and the company's EPS eventually will get to the new record highs. And you will just miss so much time, so much gain, and so many opportunities to invest. Yes, it will be way harder to find the stock that you can invest right now. You will have to put in more time and effort. Now, as you have seen, the value stocks are trading around 20 PE points. So, this is a sign for you that you should look in a value stocks right now. It will be easier for you to find the undervalued company if you will look at the value stocks. So, in my opinion, the market is for sure overvaluated now. You should invest safer and keep more of your money in cash, ready to deploy if the stock market crash occurs. But at the same time, you should keep investing, because there is always opportunities in the stock market and you always will be able to find some undervalued stocks. Thank you everyone for watching, guys. I hope you liked this video. Please leave a like button and subscribe to my channel. Thank you very much, guys. I hope you liked the video and I hope to see you in my future videos. Bye!